So do you guys remember just a couple of days ago, China essentially forced Tesla and 16 other Chinese automakers to sign an agreement that they will no longer price their vehicles abnormally, effectively ending the price war in China? Well, that has since been canceled due to antitrust violations. Clearly, antitrust violations. But guess what? Nobody's talking about it. Initially, when this was brought to financial media, even the ex-Ford CEO said this was terrible for Tesla, that Tesla's going to lose their competitive edge. And guess what? Nobody wants to talk about it now. There's literally hardly any coverage at all about this, and I'm sure you probably didn't even know this happened. So what's next? Now that the pricing war continues in China. On top of that, we're going to talk about CPI coming out tomorrow morning and what you need to know and how Tesla stock could ultimately react if things are good, if CPI comes in better than expectations, or if CPI somehow comes in bad. What's going to happen with Tesla? On top of that, we got vehicle insurance registration numbers for Tesla in China for the first week of the third quarter, and boy, are they impressive. Let's go ahead and get into all of this information. If this is your first time to the channel, hit the like button and subscribe to the channel if you like to make money and you want to stay up to date with everything happening with Tesla stock as well as the broad markets every single day. We keep you guys updated and informed, and it's free 99 to do so. So let's go ahead and give a listen to the ex-Ford CEO that said the EV Truce Deal with Tesla and China rivals is bad news for Tesla, because I think it's quite idiotic looking back now that essentially the deal has fallen through.
Let's bring in somebody who knows about this market. Mark Fields, he's the former Ford CEO and a CNBC contributor. Mark, first question I have for you, I look at this, it's fascinating, and I think, man, if you did this in the United States, you'd have a federal antitrust investigation in about 5 minutes, wouldn't you?
Absolutely. I mean, talk about antitrust violations about trying to coordinate pricing.
Right.
Yeah, this would not fly in the U.S.
I mean, this is literally the automakers getting together and setting a floor for prices.
Yeah, exactly. Well, listen, at the end of the day, this was pushed by the Chinese government and Tesla's competitors, in particular the Ministry of Industry and Information Technology, because they basically told the China Dealer or Association of Automobile Manufacturers, listen, you guys got to get together. Tesla, you started this price war. The health of the automotive infrastructure and ecosystem in China is extremely important. We as the government have put a lot of policies in place this year to support it. And we can't afford to have our own Chinese homegrown competitors continue to burn through cash and have a price destruction.
But so I'll tell you what, Mark.
So listening to this now, that there is no longer this abnormal pricing agreement, this sounds very bullish for Tesla. If you just consider what he just said, that Tesla was essentially bankrupting homegrown Chinese automakers, or at least your electrical Chinese automakers. Tesla's bankrupting them. And this was, as the ex-Ford CEO says, this is very bad, or it was going to be very bad for Tesla. So now it's very good again. And Tesla will continue to take market share in China. Let's continue on.
Mark, as an investor, I would look at this and say, well, this might be a signal that Tesla can't win in China, right? Because the thumb is on the scale for the homegrown competitors. The government is literally saying to Tesla, stop doing the things you need to do to win in China.
Well, that's no longer the case anymore. No more truce for abnormal pricing. Tesla can cut prices all they want.
I view this as bad news for Tesla because it basically handcuffs them. If you think about it, their Chinese competitors are coming out with very, very good product. And the reasons that Tesla took the price cuts earlier this year is because they were losing market share. So when you take that pricing lever away, the good news...
Nope. Tesla cut prices because they understand the real value with Tesla long term is full self-driving. It is selling software and or even licensing software. That's why they're cutting prices. You want to get as many vehicles out there that trains full self-driving faster, that trains your software faster, and lets that go to a mass market scale as quickly as possible by selling more vehicles. So what actually happened with this truce deal is essentially Tesla and 16 other Chinese automakers, as you probably already know, they came together, they signed an agreement that they will no longer continue with the abnormal pricing, just price cuts, every week or every month. They're going to stop doing that and kind of create a floor for how low prices are going to go. And after all, in China, they are seeing a deflation problem right now. So it makes sense. But what's happened now is that the CAAM has retracted this agreement. They posted on their website on Saturday acknowledging that the pricing pledge had infringed upon China's antitrust law. As a result, it decided to withdraw the pledge from a list of commitments that the automakers had initially signed under the guidance of an official from the Ministry of Industry and Information Technology. Despite the withdrawal, CAAM has stated that it will continue to encourage the 16 companies and other association members to strictly adhere to the antitrust law and engage in fair competition through independent pricing. This raises the question of what the future will look like for the EV market, not only in China, but worldwide. So they not only said, yeah, we're not going to do this commitment. Go ahead, price your vehicles however you want. We encourage that. Talk about a flip-flop that nobody, literally nobody, is talking about. So for the same comments that we just talked about from the ex-Ford CEO, in reverse here, this should be a very bullish thing people are talking about. But it's not. And it makes you wonder why. Now in China, for the first week of Q3, it looks like we're seeing about 3.2 thousand insurance registrations. Now, this is very rough data. The numbers ultimately can look different. There's going to be somewhat of a delay from usually when you get your Tesla. Maybe not that same day you actually get insurance on it, or maybe the reporting times are a little off. Maybe it takes a day or so. Usually it does to see these numbers actually being reflected and to see them actually accurate. Now, even if these numbers are indeed correct, this is still the best start to a Q3 in many, many quarters now. Believe that or not. Usually the first week in Q3 tends to be a rough one. Now, why is that? Well, during the first week of Q3, a lot of the time you do, and you can actually see that right over here, just so you guys see. A lot of the time, you tend to see a lot of exports coming out of China. The Shanghai plant is really what Musk wants to use as a major exporter of Teslas, because obviously they can produce vehicles at Giga Shanghai a lot cheaper than what they can at, call it, Fremont or other, North American facilities, right? Austin and so on and so forth. So that's probably part of it. They're probably trying to restock some of their other areas, like Australia, which essentially ran out of Teslas last quarter. There was less than 20 Teslas in their inventory for all of Australia. I'm sure the same situation with other markets that are not as hot as the US or China, such as Japan or that India region, other areas. They probably needed restocked. Probably came from China, right? That's only my speculation. That's kind of what I think happened. But nonetheless, still a very strong first week of the new quarter, the strongest that we have seen in many quarters now, in the last 5 quarters. Still very strong. Now, inflation data coming out tomorrow is going to have big implications for three really subsectors of the markets. We've talked about this before. Small and mid-cap companies, your automakers, and housing stocks. You've seen your small and mid-cap stocks really outperform the last 2 days. That leads me to believe that we're probably going to get a very good CPI report tomorrow. It's probably going to come in under expectations. What we're currently expecting, at least the markets and the average analyst estimate, is for headline inflation to be 0.3% month over month. That is a sharp acceleration from last month's reading of 0.1%. The year-over-year numbers for headline are expected to come in at 3.1%. Last month, your year-over-year reading was 4%. So you're expecting a sharp decline, and this is really going to be the thing that generates the headlines. If you come in, as I expect, around 2.9% for your year-over-year headline number, well, you should expect to see auto stocks, housing stocks, small and mid-cap stocks massively outperform. Have a huge day. I think Tesla could have a 5 to 7% day tomorrow if that were to happen. Now, your core inflation rate year over year is expected to fall slightly from 5.3% last month to 5% for June. Your month over month core reading, which I think is more important than the year over year core reading, is expected to fall as well from 0.4% to 0.3%. So you're expecting some really good numbers basically across the board. And I don't think there's a huge risk that we don't see a big fall. Like from 4% to 3.1% on the headline, is it possible we came in at 3.2% or 3.3%? Sure. Are the markets going to freak out over 3.2% or 3.3%? I doubt it, although it is a possibility. Now, if you see something along the same lines as what just happened in Germany or the UK, where inflation is reaccelerating, and in the case of the UK, actually hitting new highs, well, you could see a year-over-year reading somewhere around 3.5%. You could see a month-over-month reading not coming in at 0.3%, but coming in around 0.4 or 0.5%. That's where you could see a lot of downside for our markets. But I don't think this is one of the biggest catalysts that we have actually for the broad markets. I think this is a massive catalyst for Tesla and for the three sectors that I initially stated. But as far as the indexes, which are mostly dominated by your other big tech names, Tesla's about a 4% weighting, Microsoft and Apple are 3 times Tesla's weighting in the NASDAQ, in the S&P. It's this, and I want you to listen to this warning an analyst just gave us about this special rebalancing that's going to be happening right before big tech earnings. I think this is something to seriously consider as we get closer to big tech earnings. So I'm going to start this clip towards the end because I think you really just need to hear the warning that comes from this analyst. So let's go ahead and roll this clip.
Gets a little obscure. So obviously you're picking a number here that's arbitrary. And you can argue, well, why isn't 46% or why shouldn't it be 50%? You could make those arguments, but I don't think it's unreasonable given some of the...
He's talking about the top stocks controlling a percentage of the index. Why shouldn't it be 50%? Why shouldn't it be 45%? They want it at about 38%. And that's what this special rebalancing is supposed to do. If you have not heard about this yet, this has happened twice in the past. It has happened in 2011 and on May 2nd specifically. 3 months later, by August, the S&P had fallen 20%. The NASDAQ had fallen 15%. So historically, this is not a positive thing. Okay, now let's continue on.
The issues that have happened in the past for them to impose some kind of restrictions on the size of the companies.
All right, gentlemen, thank you.
I just think the timing, I think the timing is significant. Real quickly, the timing is significant. This is pre-earnings season, so you're going to see a big tech week at the end of July, and they're doing this before. I think they're doing it for a reason, so buckle the chin strap.
Ooh, a warning sign, perhaps, I guess. All right, Jeff Kilberg, Bob Pisani, we appreciate your time today.
Ooh, they're doing it for a reason. Oh man, things are about to get crazy out there. So obviously, if the markets do fall, you could expect Tesla to not be immune to something of that nature. That's why I wanted to bring you guys this little clip, because could be troublesome, or at least it could be a troublesome sign heading into big tech earnings, because if anyone's going to have an indication of how your Apple, your Microsoft, your Google, your Amazon earnings are going to come out, it's probably Invesco's QQQ and the S&P 500. Now, before we go ahead and wrap up this video, I do want to look at the technicals just briefly, but I also want to kind of remind you that if inflation comes in better than expectations, you currently see the highest amount of shorts in Tesla stock that we have seen in over 2 years now. You're currently looking at 96.5 million shares that are sold short, with short seller losses bigger than 2021. And I mean, mix this in with some of your option activity that we have seen recently, which has been very, very bullish, super bullish. Just look at the bubble chart here. I mean, it kind of speaks for itself. Look how big these green circles are. Look how small these red ones are. The option buyers are out full steam ahead. And some of the biggest option activity you actually seen today was the 270 call and the 280 calls, coming in with 85,000 for volume, 64,000 for volume at the 280 call, and the 275 call seeing 51,000 for volume versus the highest put option seeing 41,000 for volume. The 270 call was over double that. I mean, it's clear, right? Or at least it should be. A lot of people are betting Tesla stock is going to go higher from here. And if we do get a positive CPI report, well, you could see some shorts cover on short positions. You could see a gap up, essentially, with Tesla's share price. Not to mention the option activity could help fuel a gamma squeeze as well. Now, if we take a look at Tesla's stock and the actual technicals here, it's almost picture perfect. You're seeing a slight consolidation, and you actually closed green today. You did. You closed up almost 0.1% in the green, which doesn't look significant, but at one point today, you were trading down to about 260 for Tesla. 266.41, it looks like, was the low today, or 266.37. And you retraced all the way back up to almost closing above 270. You filled the gap, this gap up, this 7% gap up upon the delivery numbers, right? They came in better than expectations. Tesla stock rallied. It rallied for another day. It came down, and you filled this gap that everyone was talking about, and you bounced off of it perfectly. And now you're retracing back to the upside. This chart couldn't look any better if you were expecting Tesla stock to actually go higher from here. And that's exactly, no surprise, what I'm expecting. Now, if you do get a bad CPI report, watch that 20-day moving average. You bounced off of this back here when this 20-day moving average was at about 240. Bounced off of that almost perfectly as well. So I would expect to see another bounce at that level. That would be at 262.82 for a bounce off that 20-day moving average. The RSI is reset back to 62.75, so you definitely have some room to make an upside move. And you're currently experiencing a golden cross. That shouldn't be overlooked as well. That is a very bullish kind of technical indicator using the moving averages, but the MACD tells a different story. You're starting to curl down even more, and this would not be a positive sign. Although you don't have to follow exactly what the MACD does, this one doesn't look as bullish. So there's quite a few bullish things going for Tesla's technicals, but that MACD is a little problem. So that is what I have for you here in this video. Hit the like button, subscribe to the channel on your way out. If you guys want to stay up to date with everything going on as soon as videos are posted, hit that notification bell as well. If you guys also want to take it a step further and come trade with me live every time I make a trade, link down below in the description of this video. You can ask any questions. This is not like a texting alert. This is like an actual community where you can ask me personalized questions if there's anything you're curious about, or you just want to come learn and grow with us and make money with us. Link down below in the description of this video. Sign up. There will be instructions on what you essentially need to do. And it's not very much. If you guys also want to get yourself some free money, essentially sign up for Webull, deposit $1, get yourself 15 free stocks. It's a win-win for everyone. You're going to throw me a couple free stocks my way, so it does help support the channel and continue to make these videos possible. Thank you for watching. Enjoy the rest of your day or night, and I will see you in the next one.